Welcome back to the deep dive. Today we're cutting straight through the noise. We've got the investor presentation for Geojit Financial Services Ltd. This covers Q1 of the fiscal year 2026. Our mission for you, the listener, is pretty clear. Let's quickly get a handle on the strategic playbook of this major Indian investment firm. We want to go beyond just the numbers, understand their scale, what makes them unique operationally, and how they connect, well, traditional finance with the latest digital stuff.
And that connection, that bridging, is exactly what jumps out from these documents. I mean, look, this is a company founded way back in 1987. Deep roots. But their strategy today, it seems heavily driven by sophisticated tech. Their core purpose hasn't changed, helping customers build long-term wealth. But their methods show this real balance between that long-term vision and, well, cutting-edge integration.
Okay, let's kick things off with just the sheer size and sort of the identity behind it all. The promoter structure itself is pretty interesting, isn't it? You've got BNP Paribas, that's huge global credibility right there. Then C.J. George, the founder, chairman, MD, the driving force. And then the Kerala State Industrial Development Corporation, KSIDC.
Yeah, that mix is quite potent. It signals institutional backing from BNP. You get the entrepreneurial spirit from the founder. And crucially, that state-level stability and regional commitment through KSIDC. It ties them directly to Kerala's growth story, reinforces those domestic roots, while BNP provides that global standard.
And their reach isn't just about who backs them, it's massive in client assets. As of June 30, 2025, they're handling over 15.51 lakh customers.
Which is what, over 1.55 million clients?
Exactly, and total customer assets at 1,01,252 crore. Huge numbers.
Yeah, that definitely confirms they're operating at institutional scale. But delivering services largely to the retail investor, mass retail. And to handle all those millions, they use this expansive multi-channel approach. We're talking 508 physical offices. That's a lot. Plus robust online platforms, dedicated customer care, even WhatsApp for quick support.
Okay, now here's where the strategy gets really, really interesting. Defining, maybe. We often think of firms focusing on, Mumbai, Delhi, the big metros. But Geojit, they seem to have picked a very different battleground for growth.
They absolutely have. And the numbers, they really tell the story. The presentation says 78% of their branch network. 78%.
Wow.
And 76% of their clients are in Tier 2 and Tier 3 cities.
So this isn't accidental. It's a deliberate strategy. Deep regional penetration.
Exactly.
We often praise that kind of regional focus as smart growth. But I have to ask, if nearly 80% of your physical footprint is outside the major hubs, what are the hurdles? Isn't maintaining all those branches, potentially a drag long-term?
Yeah.
Especially against purely digital, low-cost players.
That's a fair challenge, a really important one. The presentation seems to frame those branches not as a liability, though, more like a critical asset. For building trust, for onboarding clients, especially in markets where maybe digital confidence is still growing. They seem to be betting that face-to-face interaction, local language support, that's key for converting new investors in those mid-sized cities and building those long-term wealth relationships. It's a high-touch, sort of hybrid model.
A compelling case for scaling trust, then. Okay. Beyond just India, they've also successfully expanded internationally, right? Focusing on the Gulf Cooperation Council, the GCC countries.
Yes, that's a really key part of their strategy, catering to the large, non-resident Indian, or NRI, population there. They have joint ventures in the UAE, Oman, Bahrain, and Kuwait. And a big milestone was Geojit in the UAE. It was actually the first Indian licensed stock brokerage in that market. Shows they're pioneers in that global expansion too.
And that pioneering thing seems to track with their tech history as well. They launched India's first internet trading facility, way back. And FlipMe was India's very first mobile trading app.
Right.
They consistently seem to understand that getting mass adoption means making things accessible.
So moving from scale to what they actually offer, their service range is really comprehensive. They're pretty much positioned as a one-stop financial shop.
Yeah, looking at the product list, it covers a lot of ground. Under the invest category, you've got equity, mutual funds, commodities, IPOs, even sophisticated stuff like alternative investment funds, AIFs, and gold ETFs. And then there's the protection credit side. So distributing life, health, general insurance, plus offering leverage like loan against shares, loan against mutual funds through Geojit credits.
And being able to package insurance and credit alongside investments.
Yeah.
It's really vital if you're focused on those long-term client relationships. But they also climb up the value chain quite significantly with their specialized financial planning division, Stepus.
Right. It's positioned as fee-based, which, immediately sets it apart from just transaction brokerage. What kind of value are they aiming to deliver there?
Well, this is where they really cement that advisor role. Steptest focuses on holistic planning, investment analysis, retirement planning, tax planning, and there's a heavy emphasis on investor education services too, all delivered by certified financial planners, CFPs. That shift from just selling products to selling professional planning, that's key for capturing recurring high-margin revenue.
They also target the high net worth segment, don't they, with their portfolio management services, PMS. The presentation lists 5 unique discretionary portfolios: Advantage, Freedom, Daction, Ethical, and Beacon.
Exactly.
The names alone suggest tailored strategies, maybe regional or ethical focuses.
Precisely. PMS is for investors who want a dedicated manager handling a specific portfolio based on a particular mandate.
Yeah.
It's personalized professional money management.
Okay, now let's zoom in on maybe the most technical product mentioned here,
Okay.
the Geojit Yield Plus Fund, their AIF offering. Can you unpack why this is considered so sophisticated, especially that market agnostic strategy?
Sure. So first off, it's a Category 3 alternative investment fund, tightly regulated by SEBI. When they say market agnostic, it essentially means the fund isn't trying to profit primarily from which way the overall market is heading up or down.
Okay.
Instead, the strategy relies on using equity derivatives, so futures and options combined with advanced quantitative analysis.
So it's not about beating a benchmark like the Nifty or something. It's about delivering absolute returns.
Exactly that. The goal is low risk, low volatility, trying to be that all-weather product in a client's portfolio. They're specifically targeting consistent returns. The presentation mentions around 150 to 200 basis points above the risk-free rate.
Right. So if the risk-free rate is, say, 7%, they're aiming for 8.5% to 9%, regardless of big market swings.
That's the target, yes. And this structure, focusing on absolute returns, optimized for tax efficiency. It demonstrates a really advanced approach to risk management.
Right, shifting gears a bit, offering that kind of complex service effectively to millions of users, well, it required some serious tech muscle.
Yeah.
Geojit seems to have built out a whole platform ecosystem.
They have. Their core trading platforms, Flip and TraderX, they're described as state-of-the-art, loaded with tools for both speed and deep analysis. Take Flip, for example. It offers features active traders really need. Things like a heat map view to quickly see market movements, comprehensive watch lists, and the options chain analysis tool, absolutely critical if you're trading derivatives.
Yeah.
Plus, they integrate research and analysis right there on the security page, so you don't have to jump between different apps or websites.
They also seem to have something in between pure self-directed trading and full PMS management.
Yeah.
Their Smartfolios feature.
Yeah, Smartfolios is a neat solution for what you might call the guided investor. It's not quite robo-advisory in the pure sense. It provides baskets of stocks. These are selected by professionals, driven by data intelligence, with themes like Can Slim Select or growth icons. But the key difference is the client stays in control. They have to actually confirm the recommendation before any trade happens. So it's professional intelligence, but delivered with client oversight.
Got it. And for the pure mutual fund investor, there's Funds Genie. Sounds user-friendly, packed with research recommendations. But there's one feature that really stood out to me. Addresses a common problem.
Yes. The ability to import external mutual fund investments. That's actually huge.
Right.
Think about it. If you've got investments scattered around, bought directly through different platforms, maybe through your bank, Funds Genie lets you pull all that data together, track and analyze everything in one place. That kind of centralization really enhances the client experience, a big plus.
That seamless integration aspect, it seems like a major strategic pillar for them, especially when you look at their B2B strategy, these 3-in-1 accounts.
Oh yeah, this is a very powerful institutional strategy. They have tie-ups with major banks, PNB, Federal Bank, HDFC Bank, Axis Bank are mentioned. And this creates the 3-in-1 account, an integrated savings bank account, demat account, and trading account, all linked.
So how does that actually reduce friction for the client day to day?
Well, the convenience factor is massive. The client doesn't need to constantly transfer money from their bank to a separate trading account and back again. They can just set aside or block funds right in their existing bank account to buy shares. They can see their bank balance and their demat holdings, basically side by side. It means less hassle moving money, potentially faster execution. And they mentioned dedicated call center support, specifically for those partner bank clients. This whole integrated approach, it's a significant differentiator in a market where speed, security, and convenience are paramount.
Okay, so we've got this picture. Wide physical reach in smaller cities, sophisticated products, seamless tech. How does all that translate into the actual results for Q1 FY26? Let's look at the operational growth first, comparing June 24 to June 25.
Right, the results seem pretty healthy across the key metrics they highlighted. Client acquisition looks robust. New clients grew by 31%, bringing in over 33,600 new investors in that period. But, arguably the most important metric for long-term health is recurring revenue.
And that looks strong too. The executed SIP book, that systematic investment plans, grew by 24%, reaching 129 crores.
Yeah, that 24% growth in SIPs is a really strong signal. It suggests their strategy of targeting that long-term retail investor, especially in Tier 2 and 3 cities, is working. People aren't just doing one-off trades. They're committing to regular, disciplined investing. That's sticky revenue.
Makes sense.
We see similar strength in asset growth, too. Mutual fund AUM grew 17%, excluding their overseas JV. And the specialized smartfolios AUM grew even faster, by 21%. They're clearly capturing more of the client's overall investment wallet.
They also significantly expanded their lending side, didn't they? The total lending book hit 760 crores as of June 2025.
Yep, shows growth in that credit offering, too.
Okay, so that gives us a good feel for the operational momentum. Now let's turn to the consolidated financials for Q1 FY26 itself.
All right. The company reported a total income of 18,118 lakhs and a profit after tax, or PAN, of 4,581 lakhs. Now, just for clarity for listeners, a lakh is 100,000 rupees.
Right, good clarification. So that total income is roughly 1.81 billion rupees for the quarter.
Correct.
So when we look at that 18,118 lakhs of total income, what's driving the revenue mix? Where's the money coming from?
Well, the main engine is still clearly capital market activity. Equity and equity-related income was the biggest chunk at 12,105 lakhs. That reflects, high activity and interest in Indian equities during that period.
Understandable.
But critically, those recurring income streams provide stability. Mutual fund distribution income brought in a very significant UVA 2,561 lakhs. And when you combine that with fee income from things like Steps S planning and other distribution, it helps buffer them against the natural ups and downs of the market.
So when we're evaluating a company like Geojit, one focused on long-term wealth creation, their non-financial commitments, things like ESG and community focus, often tell you a lot about their stability and governance, right?
Absolutely. This is where you often gauge the quality of management and their long-term thinking. The presentation highlights strong board-level oversight in this area. They actually have a dedicated board-level corporate responsibility committee. That ensures these initiatives aren't just, marketing fluff, but actual strategic mandates.
And on the environmental side.
They mention green building accreditation for their corporate office and active support for a low-carbon economy, setting a decent standard there.
Okay.
But their social responsibility work seems particularly focused. It goes beyond just writing checks. They have specific named programs that tie directly back to their core business or their community roots.
Like Prodi, that's their financial literacy program, right?
Exactly. Specifically for college students, run in collaboration with NESM, the National Institute of Securities Markets. That ties straight into their mission of fostering long-term wealth creation by educating the next generation of potential investors.
Makes sense. And they also seem committed to health and social inclusion?
Yes, they run SPARSH, which is a community health project, and UDBODH, which provides a free daycare center for people suffering from dementia. These are quite specific focused initiatives. It shows a deep civic commitment, particularly in the regions where they have that strong physical presence. #Shag outro.
Wow. Okay, so this deep dive has really shown the complexity of Geojit's strategy. We've seen a company that works at global scale with BNP Paribas, yet centers its entire domestic growth strategy on Tier 2 and Tier 3 cities. That's quite a contrast. They offer these highly specialized, market-agnostic funds like Yield Plus, while also focusing on mass accessibility through things like seamless 3-in-1 bank integration.
Right. It really is a strategic paradox, isn't it? But it seems to be working for them. Marrying the trust that comes from that physical regional presence with the efficiency and sophistication of advanced digital tech.
So what does this all mean for you as you think about the future of investment services? Here's the provocative thought we want to leave you with today, connecting back to that core strategy we discussed. The presentation clearly shows this robust physical network in Tier 2 and Tier 3 cities, combined with advanced digital platforms like Flip and Funds Genie. Now, for an investment firm that's all about long-term wealth creation, What does this specific combination, deep regional reach plus sophisticated tech, suggest about the future path for retail investment growth across emerging markets? Is this hybrid model, this blend, the only truly scalable way to build trust and encourage wealth accumulation outside of the biggest urban centers?
Something to definitely ponder as you connect your next set of dots.
Until the next deep dive, stay curious.